Earnings have been better than expected pretty much across the board.
The market is starting November out on a high note.
It is the most upgraded stock on MarketBeat's platform. We could easily see new long-term highs set before the end of the year.
MarketBeat's Thomas Hughes is back with the top 5 stocks he sees as the best buys this month.
We're looking at a 200% to 300% stock price increase simply based on the valuation.
Find out how his outlook might differ quite a bit from some other guests we've had on the show last month. Let's dive in. Thomas, so great to have you back on for another month and new stock picks. We are talking about November and your 5 top buys of this month. Before we get into the list of names that you have for us today, let's just talk about what you're looking forward to or what the market is looking like heading into November.
Well, we're deep in earnings season, so that's really driving the market right now. Earnings have been better than expected pretty much across the board, all sectors, all the big names. Guidance is good, but really underpinned by technology and AI. There's AI is driving results in quite a few of the names on our list today, but also in play is the FOMC. They've lowered rates again. We're expecting some additional rate cuts over the next couple of quarters. At their meeting, they did call into question whether or not they were going to cut rates again this year, but I think the market is still pretty much counting on that. There would need to be some change for them to get off of the path that they're on. Right now, it seems like the economy is still pretty resilient. Labor markets are resilient. Inflation has not been as hot as people were thinking due to tariffs. So it really leaves them in a good spot as far as rate reductions, in my opinion.
Now, we're still very much in a market rally mode right now, and you'll see that in some of the stocks on your list today. But let's get right into it. What's the first company you have on your November buy list?
Right, that's MongoDB. MongoDB is interesting because this is an AI name. It's a data center play, or I should say, a database play. Really critical for AI training, AI models, AI inference. And it was long in the doghouse. When AI came to the rise a few years ago, we thought MongoDB was going to be one of those awesome AI performers with huge surges in revenue that didn't really come through. That happened for a few other stocks. Advanced Micro Devices is one, but the latest report, the one before the one we're expecting in a week or so, over the summer, revealed some traction in the core business, better than expected results. Since then, we've seen the analysts start piling back into the stock. Right now, at the end of October, it is the most upgraded stock on MarketBeat's platform. They're leading it to long-term highs, assuming that the upcoming results provide the good news that we think is going to be in it. We could easily see new long-term highs set before the end of the year. Looking at the chart right now, it's looking pretty strong, on the verge of a major reversal. So we're just looking for some good results to drive this one. But based on the chart, it looks like we could get a high single digit to a low double digit upside even before the results are released.
Yeah, the analyst upgrades are interesting. That consensus price target is still nothing too exciting, but the high end estimates on this one are good. And those are some of the more recent estimates, right?
Well, right. So that's what's really critical with the analyst data. It's not what the consensus says, which is important, but it's more the trend. So right now, the analyst revision trend is positive. We've got upgrades and increased price targets. So we're being led to an above consensus level, being led to the high end, which I think right now is around $430. So we still got a pretty good upside ahead of us, I think.
I just want to go a little bit deeper on this stock simply because we haven't heard this name very much on the channel. Let's talk about where this company fits in the whole AI competitive scene.
Well, it's kind of a parallel to Oracle. It's more of a niche player. It is leaning hard into data center and into AI capability. Its target markets are really for developers and the development of apps. So it's existing alongside Oracle. And what we're seeing in the demand ecosphere, Oracle is certainly the leader as far as AI database goes, but MongoDB is a very critical player in the ecosystem, and there is plenty of room for both stocks to exist and to continue growing robustly.
All right, a good first pick for November. Let's move on to the second stock for today.
Right, the second one is Amprius Technologies. This one's, really a gimme. I say it right in the article that the setup today is the same as it was a month ago. This market is very bullish. We're in an uptrend. All the indicators support higher prices. Right now, what I see in the price action is another bullish flag. So assuming we get a break to the upside, which I don't see why we wouldn't, this stock is going to rise another $7 or so pretty quickly, probably before the end of the year. That's more than 50% upside. We'll put it on track for setting a new high. based on the outlook for this company's business, the increasing analyst sentiment, increasing institutional ownership. This market's going to set new highs. It's just a matter of time.
Yeah, the whole battery sector is really growing a lot right now. And I think that's closely tied to the growth we're seeing in the robotics industry, too. We have a lot more to talk about with AMPX, but if you're interested in some other battery names that are doing really well right now, make sure to check out this premium article on MarketBeat. It's a list of 5 battery and lithium stocks that are charging the future. You can scan the QR code or click the link in the description of this video to get that free list of stocks right now on our website. All right, Thomas, let's get back to AMPX. I want to look at their chart a little more. They have had some ups and downs, but it does look like right now the stock is getting some pretty clear support.
Way back in September, the market moved to a new long-term high, rose above the 1050 level. So right now, that is my target for critical support, 1050. Last 2 months, the market's been above that level, tested it a few times, moved higher each time. In that time, the moving averages continued to move higher, providing some more support for the market. So even within that testing of the 1150, 1050 level as support is still increasing above that level. So right now, what we're really seeing is the market is pushing the stock price up against the ceiling, which is right around 1330. That's kind of coincidence with the high set during the IPO period. And so the market is pushing the price up against this resistance point. And what I see happening with the volume rising is eventually we'll get pushed above that level. That'll be a pretty critical pivot point. And at that time, I think that we could see a really significant inrush of capital that could include retail investors, but also the institutions.
What would be the catalyst to get this stock moving higher? Is there going to be a change in the market? Is it just the growth of this company and their product? What's that big catalyst that we're looking for?
Well, it's going to be the results, the deal pipeline, and the guidance. So this company is still in the very earliest phases of its production ramp. The demand is also ramping. It's being affirmed by numerous follow-on orders by OEMs in the drone and the UAV industry. So this technology that is applicable to any battery situation globally is being affirmed by the defense industry. So over time, I see this company kind of taking over, or at least taking a large share of the battery industry, generally speaking, which is really a huge growth opportunity. For this stock, really, right now, the sky is the limit.
I know you've been a fan of this one for a long time. Excited to see it pop back up on another buy list for the month. If you've been watching the series of all of the videos that Thomas has had his top 5 suggestions every month, I think this one has shown up at least 3 times. This might be the 3rd time it's been on, right?
Well, I mean, since the bottom in September 24th, we've had like numerous entry signals. I mean, the volume has been ramping. It's still ramping today. So this market is just swelling. And so it's swelling to this point where eventually there's not going to be any more overhead resistance, no more overhang from the IPO. The short sellers aren't going to be interested, and it's just going to be buy, 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 buy. There won't be any shares available, and the price it will skyrocket.
All right, some good suggestions for our viewers today. Let's get on to the 3rd company you have for us.
Right, that's Salesforce. Now, Salesforce's stock price has struggled over the last year or so. It is now currently at the bottom of a pretty deep correction. But what I see in this one is a high potential for rebound because the analysts are still not quite on board with the recent guidance update, and they're in wait and see mode. So they're forecasting growth to slow again in the upcoming results, which is contrary to what the company's guidance update said just a few weeks ago. They're banking on reacceleration to double-digit levels. Could start as soon as this current quarter, but will probably be indicated in the guidance, and that's due to agentic AI. Salesforce has been investing in agentic AI for years, and now its platforms are kind of coming together. Its ecosystem is really well matured with partnerships across, the blue chip tech ecosphere. So I would be very surprised if its revenue growth did not reaccelerate. Now, looking forward, the forward outlook for this company is for the growth to persist in the high single-digit range, which is really well below what the company is saying. So in the upcoming results, if we see, this guidance being affirmed in the details, we should see a very strong and robust analyst upgrade cycle follow, which will include revenue targets, earnings targets, and stock price targets, and really help, get this rebound underway.
Yeah, I think this is a really interesting one simply because the company and analysts are in such disagreement over the future and where this company could be headed. What do you think is the biggest reason there's a discrepancy there?
Well, the analysts just aren't sure about the growth. Now, to be fair, the growth did slow. It has been slowing. It's a giant company, so it's got no other possibility but for growth to slow. It could continue growing by the same dollar amount each year and even a larger dollar amount each year. And because of its size, the percent gain is going to be smaller. And so for analysts and for, money watchers, it's all about the percent gains. With the percentage growth slowing, that was a negative impact for the stock price. So right now, the market has bottomed because we have this kind of expectation for growth to reaccelerate. And I say that we're in wait and see mode because right now the analysts haven't really upgraded their outlook to reflect the new guidance. So with this upcoming report, we see it affirm the guidance. I really would expect to see the analysts follow suit with a bunch of, revisions, positive revisions to help energize this market.
Last question on this one. Let's just talk about how much growth investors could expect to get. If you're buying in November, you're likely buying at that bottom. If this is a long-term hold, even by next year, how much growth do you expect for Salesforce?
Oh, it'll be in the double-digit range. It'll be verging on triple digits. This blue-chip tech stock will probably be trading around 30 times its current year earnings. So looking forward to 2030, that's just 4 years away almost. It's at only 13 times earnings. So just in this scenario, the stock price could rise by at least 100%. But because we expect these growth forecasts to be too low, we're looking at a 200% to 300% stock price increase simply based on the valuation. But this is over time. This won't be real fast. It'll happen over the next, few quarters to a couple of years probably.
Yeah, I think that's a good thing to point out. This isn't one of those instant overnight growth stories, but over time, this could be a good one to have in your portfolio, especially if you're getting in near that bottom. Another great suggestion, Thomas. Well, this next one is one we've definitely talked about plenty of times before. We talked about this report's coming out mid-earnings season, and this one still has a ways to go, but is already seeing a nice run up in the stock.
Well, right, this is Nvidia. I wrote about Nvidia 3 times this week because the news cycle is that powerful right now. And what we're seeing in Nvidia is a wicked FOMO-driven meltup. The outlook for this company is robust. It's being priced into the market. We don't even know how big it is because this bubble is still forming. There's all this deal pipeline is growing. People are building data centers globally. Mr. Huang just went to South Korea. I bet we're going to hear them talking about a South Korean sovereign data center pretty soon. So just a really huge pipeline. Analyst sentiment is in line with this. They're lifting targets. They're upgrading the stock. It's just driving this huge, fear of missing out because the outlook right now is for the stock price to rise by 50%. And with the earnings outlook still ballooning and the analyst outlook still also blossoming alongside of it, that 50% is probably a lowball target. So, right now the market is just rushing in. It's just rushing in, and it's driving it up. And I think that this stock could reach the 270 to 300 level before the end of the year, pretty easily, potentially before the next earnings report.
Yeah, I think with a company like Nvidia, anytime we talk about growth, I just look at that market cap, seeing that it's nearly a $5 trillion valuation already. The thought of that growing another 50% is a little intimidating to even think about. And it also makes me wonder, could Nvidia be the first to fall if we are in that AI bubble that so many investors are talking about?
I will say that Nvidia is definitely in a bubble, right? It's swelling and growing, and it could pop. What I said in my most recent article about Nvidia is that when it pops, it might not pop in a traditional manner. You got to think about the amount of cash that this company has been growing over the last year. I think it grew its cash pile by like 60% year over year in the last earnings report. It's got tens of billions of dollars. It's net cash relative to its entire liability. It's got the money and it is investing in the future of AI. So the data center boom bursts, there'll be a robotics boom after it. There'll be an autonomous vehicle boom. There'll be a talking robot boom, whatever. There is going to be more technological booms. And then you got to think that part of what's driving NVIDIA today is an upgrade cycle. So they're building new data centers, but they're also upgrading the old ones. So the upcoming Vera Rubin line isn't really a major technological advancement. It's more of an optimization for AI. Eventually, there will be a technological advancement in these GPUs. And then once again, we'll be looking at another multi-billion-dollar upgrade cycle to persistently keep this company's revenue strong and growing over time. And even if the growth outlooks that are being forecasted today are correct, the stock trades at 10 times its 2035 earnings, which suggests a 200% stock price increase over the next decade. 200%. That's a huge gain for a stock that's already up by quadruple digits.
Yeah, I think that's the last thing to talk about with Nvidia is I think some investors are wary of buying when a stock is on such a big run up and it's had 10% growth in just the last week or so. Is now really the time to be getting into Nvidia, or is any time a time to be getting into this stock?
Well, one of the major tenets of stock trading and investing is to let your winners run. If it's winning, it's going to probably keep on winning. Right now, the most recent chart signal, the one at the end of October, is a bullish continuation that assumes that the rally is only halfway over. The April to September rally, and that was a huge, huge run. How big was that one? That was like from 90 to 180. So that's like a 100% gain right there. So we're looking at another $90 upside from this breakout point. We've only taken out like, maybe $10 of it. So we're looking at a pretty solid upside, just in the next few months, not even counting like the long-term outlook, the valuation outlook.
That's another really good stock to have as much of as you can with that much growth ahead for this company. The last name you have for us, getting onto your fifth stock buy for November, is another very popular name for investors.
Yes, my last stock is Palantir. Now, Palantir is another one of those names with an outlook that's just kind of blossoming and swelling. We don't know how big it is. Another company with a very foresightful CEO who is, while they're engaged in their current business and growing it, also investing and expanding into, new businesses, trying to open up those pathways to growth. Now, the critical factor with this one is another really nice technical breakout. Palantir stock reached new highs in October, broke out to a new high. Well, we reached new highs over the summer, tested the highs in October, and then broke to a new high right at the end of the month. To me, this is another continuation signal. It's backed up by bullish swings in the indicators. We're looking at more than 100% upside potentially from this move. A dollar value at the low end, maybe in the $80 range. A very robust upside for the stock with the momentum indicators pointing to a lot of the rise happening like this month and over the next couple of months.
Yeah, this is an interesting one to have right now. I think earlier this week we had somebody saying Palantir is on their drop list simply because they think it's grown too far, too fast, and probably get out and cash out while you can. And there are definitely retail investors who are of a different opinion, saying that Palantir is just starting to grow and that there's so much more ahead for this
Right.
company. Where do you fall in that? How explosive of a growth, how insane the PE ratio is on this stock versus the potential growth ahead?
I think the company has a pretty robust growth outlook ahead. It certainly has utility for businesses and governments. It's expanding its offerings. One of the latest news headlines was an expanded partnership with Lumen to help accelerate the adoption of AI by enterprises, which is just good news for its business, to unlock the doors to revenue that are already pretty much wide open. So it's right now, another bubble's forming, but it's one that I think that will have a better end than bubbles in the past. Right now, the stock price is heading higher. We get a correction. I think that it would be an absolute buying opportunity.
Yeah, I think one thing with all of that growth potential, many investors are looking to see Palantir see that growth show up in the numbers. Really, there's a lot of expectations coming for the earnings report that's coming, very soon in November here. What should we see in that earnings report to kind of justify the valuation of this company?
Well, right now the bar's set pretty high. The analysts are looking for a 10% sequential gain with some estimates leading to the high end. So we're going to want to see some strength and we're going to want to see some positive guidance. The guidance may be what matters. Even if the revenue is a little bit weak, if the guidance is still strong, the stock could continue to move higher. However, a likely outcome may be that we see the market consolidate a little bit before moving higher, unless we get a really, really robust report.
All right, Thomas, a lot of good discussion on a lot of really big names out there in the market. Final thoughts on anything that investors should be prepared for coming up in November?
Well, there is possibility that there will be some more positive news regarding China and trade relations. The last couple of days, there have been a little bit of easing of the tensions. If that continues, I think that it will really brighten the macroeconomic outlook globally, and that will be a huge boost for the entire stock market, S&P 500, Russell 2K, Dow, NASDAQ, all of it.
All right, a lot to look forward to in November. Thomas, thank you so much again for these 5 buys for November. Let us know what you think in the comments. Are you already in some of these names and excited to add some more? Are there other names that you are looking to buy in November? We'd love to hear your thoughts in the comments. Thanks again for watching, everyone. And as always, happy investing.